Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. Digital payments overtake cash in Russia. For the first time in the fourth quarter of last year, Russians made more payments digitally than with cash, according to analysts from Sberbank. Sberbank crunched the numbers as part of its Sperdata project, finding that Russians made 50.4% of total transactions with cashless instruments during the quarter, up 4.5% on the same period in 2018. The migration away from cash is not limited to big cities, with 36 regions reaching the 50% tipping point. Murmansk region in the northwest leads the way with 60% of transactions cashless. Meanwhile, Moscow and St. Petersburg lag, coming in at 30th and 19th places in the ranking of Russian cashless cities. Russia's migration to digital payments has been partly driven by the creation of a national payments card intended to challenge the dominance of Visa and MasterCard. The scheme was built at the behest of President Vladimir Putin in response to US and EU sanctions in 2014, which saw MasterCard and Visa cut off services to several of the country's banks following the annexation of Crimea. Next article is what an Amazon and Goldman Sachs partnership means for Wall Street and the FinTechs. Last year saw an announcement from Google, Apple, Facebook, and Amazon, the GAFA, Quartlet moving further into financial services. In this op-ed, Sarah Kocianski, head of the research for banking and fintech consulting from 11FS, discusses what the implications could be for Wall Street and big tech. Last year saw a series of announcements from Google, Apple, Facebook, and Amazon, the GAFA, quartet moving further into financial services. Apple Card being the most significant, but Facebook Pay and Google's collaboration also created buzz. Now Goldman Sachs is in talks with Amazon to offer small business loans to its U.S. customers. Amazon is an interesting one. It already offers loans and insurance, and while its first attempt at entering the U.S. or the student loan market through its partnership with Wells Fargo ended abruptly, this week's announcement signals that they've learned from that experience, also not forgetting the recent BBVA announcement to sell products through its marketplace. It is becoming clear that Amazon is looking to be a collaborative distributor of financial products, not the direct competitor to Wall Street that some had envisioned, at least not anytime soon. So far, big tech's push into financial services has been more slow creep than huge strides. We are seeing big tech firms continuing to add services that are peripheral to banking to their existing offerings without going full stack banking. Why? The headache of getting and maintaining a banking license is too big a risk for these companies when they can enter the market with licensed partners. The Apple Card, MasterCard, Goldman Sachs collaboration is the model to follow. Apple gets the service to users, while Goldman gets to compete with Citi, Chase, and others, while the benefit of one of the most trusted brands in the world. For Google customers that are already using Google Pay, then a Google checking account may well feel like a natural next step. They already trust Google with their transaction data. I'm not sure that many would use such an account as a deposit account for large sums, but I also don't believe that Google wants to be a holder of funds. Google's strategy appears to be focused around gathering transaction-level data it can use for its own purposes. Meanwhile, Facebook is likely to continue its payments push, both to merchants and in the person-to-person space, facilitated in part by the amalgamation of the Facebook, WhatsApp, and Instagram platforms. It has been trying to create a killer service for some time, but to date has been outgunned by the likes of Apple Pay and Google Pay, who have seen far more adoption and mainstream usage. Should banks be worried seems to be the question, but for now incumbents still have the advantage when it comes to customer numbers, helped by ongoing apathy towards switching, a status quo that is unlikely to remain. Banks need to focus on offering services and products their customers actually want and, more importantly, need, rather than offering a one-size-fits-no-one product They would be better looking at services that can be tailored to individual groups. To date, that has been intended to mean a generic digital service labeled as being aimed at millennials, when in reality it means mom and pop store owners, freelancers, gig economy workers, and so on. In order to do that, they will have to rethink not only their core technology, which in many cases is rapidly becoming unfit for purpose, but also their whole approach to serving customers. If they do that thoroughly, it will most likely lead to an overhaul in ways of working, processes, and product development. However, this doesn't mean the sudden decline for incumbents. People are increasingly happy to be multi-banked if they can get their prices and services better that way, something that has worked for big banks' favor so far. For example, people use Chime for daily spending but can't be bothered with the hassle of getting their salary paid in, as it would involve having to deal with their employer's HR system, so leave it with their older incumbent account. Should FinTechs be concerned seems to be the next question. For the foreseeable future, the likes of Chime and N26 are safe from competition from big tech. N26, for example, has seemingly done well in acquiring customers since expanding to the US, reaching 250,000 at the beginning of 2020, with customers shifting funds from Chase and Citibank. For the most part, that's been done through heavy marketing spend and luring customers with discounts and perks, including free ATM withdrawals. The question for N26 is, can they sustain that level of generosity in order to continue to attract customers, and are these users active enough to bring in enough revenue through interchange fees to make that initial spend worth it? Trust in fintech challengers are also boosted by their existing customer bases and those customers' willingness to recommend the bank refer people, something GAFA also has, as well as holding their license that are equal to those incumbents, something a GFA don't currently have and are unlikely to gain. However, a firm like Revolut, who also made a well-publicized U.S. expansion, has a different position, being less widely used as a primary account or even the daily spending account that some people use firms like Chime, N26, or Monzo for. In its case, I would suspect it has more to worry about, that there's nothing to stop Google and company offering similar services should they want to. Banks, fintechs find new open data use cases is the headline of our next article. Banks and fintechs continue to discover new opportunities in unlocking corporate clients' financial data, with banks embracing data integration for their own product development initiatives and fintechs finding new ways to collaborate with each other. This week's roundup of the latest open banking initiatives finds new use cases in business payments. I'm not going to go through all of this as it's got a little length to it, but it gets into MasterCard taps FinTech for Biz Card Boost, banking steps into payment ATIs, the accountant's world unlocks payroll data for FinTechs. We have Credit Agricole invest in data aggregation. The palette reflects on build versus buy. We have, I guess that's pretty much the summary of the rest of that article. But feel free, again, this is going to be in the description below. All the links are always provided, so you can further do research on your own, or print out anything that you would like, as you will have the direct link to the articles that we discuss. Again, guys, this is the reason I wanted to share these articles specific, was it's just showing more of the the global use of fintech, and as an investor in this new technology, it is showing that it's here to stay. It is not going anywhere, as governments are now stating it, running commercials, advertisements, and discussing it directly from their own mouth. As we see this, it's getting exciting for those of us who have been here, 2 years, 4 years, 5 years plus, to see after many stagnant years that the motion is moving so fast as of 2020. It's basically hold on, hang on, buckle up, and let's see where we go. Again, as they've stated many times over, 2020 is the year that this will all begin. We're excited to see what happens before end of year. All right, guys, the last thought is stay focused. Remember why you're here. Remember why you came. It's not financial advice. It's for entertainment purposes only. And we'll catch you guys in the next one.